I made a prediction a few days ago that we would be seeing a local top in the markets within about a 2 week time frame. Today, it's pretty clear I was right, and I wanted to talk to you about what I was seeing to identify this and what I did about it as well. So, if you're watching this, of course, the markets are a little bit rough today, so it wouldn't surprise you to be like, "Oh, okay, yeah, he's right. Why are the markets so bloody?" And most of it is it's just a local top, and the markets need to do this even in a bull market, and we're still very much in a bull market from time to time. Now, there are some individual catalysts, but you need to know in a bull market, we're always climbing a wall of worry. There's always things that people are worried about and concerned about. In a bull market, it keeps going up, but there are always pullbacks as well. So, how did I know? Well, there's a few different indicators that I use. And this is not numbers so much. I'm not that kind of an investor. I know others look at those sort of things and signals and Fibonacci levels and so forth, and that's fine if that works for you. Myself, I saw a few things. So first is I saw a shift to safety, and so Apple is one of those stocks that is really important. Even if you don't invest in Apple, keep an eye on this. Apple is basically at this point just a gigantic pile of cash. And so anytime that the market kind of shifts into a risk off environment, there's usually a lot of inflows into Apple, no matter how good or how poorly that company is doing. And so when you see, especially with the Mag 7, a sudden shift, and this is over the last month, in Apple, just you can see it just going higher and higher and higher, despite there not really being any catalyst. If there's always a little bit of news about Apple, while you see Tesla, Microsoft, Google, Amazon, Nvidia, and to a lesser extent Meta, it's just over the last couple of days, tend to sell off. That tells me that the market is shifting itself and going into a risk off environment. Usually that's for a matter of a couple of weeks. It could be a couple of months as well in a bull market. All right, so that's the first indicator is a flight to safety and safer names. Doesn't have to be Mag 7, doesn't have to be Apple. That's just what I look at. It's easier to pay attention to that rather than look at the whole market or individual indices as well. Now, the second indicator is this right here. So I'm not calling anybody out, by the way, with this, and so don't be hard on DVB. I see this pretty much any time that we get to a local top. So the context is we had a discussion on what we thought might be the easiest double in the next 3 years. So I thought PayPal, discussion for a video at a different time. I think that there's probably a lot of names that outperform PayPal, but it's an easy setup. And a lot of people agreed with me, but I got one of these. Now, this isn't the only kind of comment that I had related to this. I saw this on other threads and other names as well. But when people ask and begin to say, hey, why bother with a double in 3 years? It's a waste of time. Now, sometimes that takes form of like, I can make a double in like a week just trading crypto. If crypto is pumping, you'll oftentimes see that. Or I can be in this risky name over here and it'll double in like the next month. And you'll see unrealistic expectations of what people actually think that they can get in the market. If you are a long-term minded investor, having a double, 100% gain in 3 years, that's fantastic. Now, in a bull market, are there other names that will outperform that? Absolutely. But having people, and more than just one, push back and say that a double in 3 years is not worthwhile, that's a signal. Now, the third signal that I saw, flight to safety, an idea that a double in 3 years is not worthwhile, is a interest into the next big thing, the next shiny object. Retail, and not all of retail, you guys, I'm sure, are an exception, but they tend to flock into names, especially when the market is flying higher and higher, that are riskier and riskier, that are lower and lower quality, and also have unrealistic expectations on what those plays can do. So I saw this fairly recently with a company, actually two different companies, Grab and Oscar. Now, I posted this back several days ago. And I noted and I said that I don't need to enter every play, that there's a tendency, especially in a bull market for retail, to chase the next new thing far too often, leaving behind quality companies and stocks that have risen up a lot, like Palantir and Robinhood. And so I actually had said this, in February 17th or February 19th and February 18th, rather, that we'd probably see a local top, that this is a signal. Now, it's not that retail can't find and undercover some quality names to invest in long term. But I knew Grab. The reason why I knew Grab is my friend Amit, he had this long post on Grab, but he'd been talking about this company since at least November, I think probably before. There's some other very solid people, very credible people that also were talking about it as well back in November, and no one was interested at all. Now, all of a sudden, any post with Grab or with Oscar as well got so much retail interest, and the type of comments in those threads were not seem to be listening to those that were actually bullish on the name that said, hey, this could be a double in the next 3 years, or maybe even a 3x in 5 years. That's fine. And I think that they might be right on Grab. I'm not sure. I don't see it as that high of a quality of a company or opportunity. But in the comments, people were saying, hey, this is the next 10 bagger. This is the next Hims. This is the next Palantir. This is the next Robinhood. And it just wasn't. Like, you can't look at Grab, certainly, maybe Oscar, I'm not sure on that one, and say, hey, this is going to be a 10 bagger. It's going to be an easy money. It's going to just double overnight or anything like that. And so when you see a flight to safety in some of those big names, especially something like Apple, when you see a sentiment in retail that, hey, maybe a double in 3 years, it's just really not worthwhile. When you see sudden and overwhelming interest in kind of obscure names chasing that next shiny object, then it's probably sign for a local top. Now, you can also look at several other factors as well. I don't think that this is my favorite one, although I did notice it. I couldn't find the original thread, but margin debt actually ended up hitting a high. Margin debt probably will hit a high based on a percent. Just in a bull market, it just does the longer it does. But tends to be like a local peak that happens with margin debt. And when people are pouring into less quality names, when they're using more and more margin, when they have unrealistic expectations, and when you see some of the big guys go to a flight and safety, usually that's time to maybe take a little bit off the top. And that's what I did. Over the last couple of weeks, I've sold some Hims. It didn't get the best sell on it, but I didn't mind taking profits there. I went away from some of my less quality plays that were in my swing portfolio. I ended up building out and finishing out my hedge, which was on block. And boy, that printed today. My goodness. I'm out of that one, by the way. I just, when it more than doubles in an instant, I'm fine taking profits, even if it was supposed to be a hedge. And we can continue to fall further. And, I'm holding a little bit more cash than normal. What I don't do when I sense a local top is sell large amounts of stock and just wait in cash. I'd like to be fully invested or fairly fully invested. I don't mind having about 10% cash for dips, but in a bull market, it doesn't make sense for me to just exit entirely. Local tops are really just that they are times in the market where it just peaks, goes down for a little while. This could be weeks or even months. Probably we're looking at maybe a couple of weeks. I don't think it'd be very long. And actually, I think next week when NVIDIA reports, that may be the end of the dip. We'll see. Anyway, that's what I did. That's why I saw what I did. And that's why I took the actions of what I did as well. Those are things to look at if you haven't noticed, if you're in social media, on any kind of investing platform. When you begin to see those signals, that flight to safety, the 2x in 3 years is not worthwhile, the interest in obscure names, and maybe to a lesser extent margin debt, you might want to take some gains. You might want to make a hedge. You do you. Let me know what you think in the comments. Did you end up taking some action before this local top? How long do you think that this dip will last? And what do you look for when you're looking for times when it might be a local top in the market? Let me know in the comments. As always, thank you for watching, commenting, and subscribing. Until next time, happy investing.